Thank you, Mr. Chairman. This question is addressed to the whole panel. And basically, I'm just asking you to prioritize for me, given your respective roles and work, where do you think the greatest weakness in today's market structure is? And if you don't want to limit it to one thing, that's okay. But where should we look at the greatest weakness to focus right now, Mr. Sprecher?
The market is too complex. While we all support competition, and in fact, I wouldn't be here in front of you if I started with nothing and have built one of the largest exchanges in the world. So I'm pro-competition. But there's a difference between competing to get you, the investor, the best price, and simply all the intermediaries, exchanges included, trying to split up commission dollars. It's great that we compete for those commission dollars, but we've lost track of getting the best price for a company that's trying to raise capital and an investor that would like to meet a company. And I think if we just look at holistic practices to do the right thing for investors, we'll land on the right public policy.
Thank you. Mr. Griffin?
In my opinion, the issue of complexity is dwarfed by the issue of resilience. The impact of the flash crash or the events that took place at Night Securities dwarf the day-to-day issues around complexity of marketplace. And putting in place the appropriate infrastructure that allows for the market to not undergo moments of chaos and panic is of the utmost importance to protecting the confidence that we should all have in the functioning of the U.S. equity markets.
Thank you. Mr. Cronin.
My biggest concern probably gets around investor confidence. As I suggested earlier, investor confidence is the key that we're all really trying to solve for. All good things come from high levels of confidence from market participants. Where I get concerned is there are certain elements of our market that aren't where they should be. So for example, the price discovery mechanism, which has historically defined our markets as the most robust and best in the world, has been under assault because so much activity is now trading away from those lit markets. We think that, frankly, why we supported regulation NMS is because we thought it would facilitate more price discovery, that there would be more interest in institutions and other investors in posting their bids and offers. And we're concerned that has not happened and that there is, at this point, really not a lot of incentive for activities to facilitate more posting of bids and offers. So we're concerned about price discovery. If I may, the other thing that's concerning to us is just making sure that the markets are fair. Here's a low, high impact, sort of low effort kind of thing that we can do. If there's unfair dissemination of data, let's make the dissemination of data fair, right? I think everybody would agree that if there are smart people who can process that data at speeds that none of us can comprehend, that's fine. But in the first instance, let's make sure that everybody gets the data at the same time. That would seem to be a very good fundamental start.
Thank you. Dr. Engel?
The biggest problem is that our regulatory structure as a whole is too slow, too cumbersome, and just doesn't really understand what's going into the markets quickly enough to craft appropriate solutions. That instead what we get are hyper-complex rules like NMS that just add to the complexity of the markets without solving the underlying problems.
Thank you. I actually have questions on each of these issues, the complexity, the resiliency, the disclosure, and so forth. I'm going to have time for one more question, and so I'm actually going to pick resiliency. And so I'll come back to you, Mr. Griffin, on that. And others can jump in on this if we have time too, but this issue's been mentioned already. What further changes do we, the SEC, industry stakeholders, or others, need to undertake to strengthen market integrity and prevent future market disruptions like the night trading error or the flash crash? You want to start, Mr. Griffin?
I do. So if we look at both the flash crash and what took place at night, it concerned orders of undue size or quantity entering the market without appropriate checks and balances. The broker-dealers that route orders into America's exchanges need to have solid and robust fail-safes to prevent such orders from being routed into the marketplace. But of equal importance, the exchanges should act as the last line of defense to prevent such orders from entering the marketplace and creating disruption. We need both the broker-dealer community and the exchange community to work hand in hand to prevent aberrant orders from having an undue and unfortunate, in fact, devastating impact on investor confidence.
Thank you. I'm out of time. I know, Dr. Engel, you wanted to give a quick response. Could I do that?
Yes. And in addition, we know that sooner or later, all systems break in some unanticipated way. So what we need is a market-wide holistic view of the entire national market system. Current rules and current thinking is to make sure every individual little widget keeps working. But what happens when they're all working individually, but they don't, as a system, work properly? And so what we need is better thinking about what happens when the next tsunami of market information overwhelms the market and it starts behaving erratically. That is where insufficient work has been done and a lot more needs to be done to prevent the next disruption from turning into a catastrophe.
Thank you.